Welcome back to Investing Talk Podcast. Today we're tackling a question we've seen a lot from you. Is Centrus Energy a good time to buy now? We're going to pull apart all the information we have to help you see the full picture. Before we jump right in, just a quick reminder, hit that subscribe button, like this discussion, and please leave a comment. We really do love hearing from you. And hey, if there's a specific company you want us to look into next, drop its name in the comments below. We're always looking for our next topic.
Absolutely. Our mission today is to, sift through the latest financials, the market moves, the future prospects for Centrus Energy. They play a really unique role in nuclear energy, especially here in the States. We're here to pull out the most important insights from the sources you've given us, helping you get well-informed quickly without drowning in data.
All right, let's unpack this then, because Centrus Energy isn't just any energy company, right? It sounds like it's right at the heart of this emerging nuclear fuel cycle, especially with something called HALEU. I'm genuinely curious, why is HALEU such a game changer?
Yeah, that's a great place to start. What's absolutely fascinating here, and really crucial, is Centrus Energy's position. It is currently the only U.S. commercial provider of high-assay low-enriched uranium, or HALEU, and that's operating at a pilot scale for now.
The only one, really?
The only one commercially, yeah. Think of AAE like a specialized high-octane fuel needed for these next-generation advanced nuclear reactors. You can't just run these new reactors on standard fuel. And right now, Centrus is effectively the sole commercial producer of that, let's call it jet fuel, in the U.S. This is critical, not just for energy, but for national security. And it positions the company uniquely with the Department of Energy trying to build up a domestic supply chain. It's not just a company, it's really becoming a strategic national asset.
That certainly paints a picture of strategic importance, but how does that translate into the nuts and bolts, the financials? Let's peel back the layers on their recent performance. How did Centrus actually do in 2024?
Okay, so if we look at the financials for the fiscal year ending December 31st, 2024, Centrus reported revenue of $302.6 million. This was actually a slight increase from $294.0 million in 2023, about 2.9% year over year. It kind of reflects some of that volatility you see in nuclear fuel contracts, volumes, pricing. It bounces around.
Okay, so revenue ticked up a bit. Sounds okay on the surface, but what about the bottom line? The profits.
Okay, this is where it gets really interesting and tells a key part of the story. Net income for 2024 was $21.3 million. Now, compare that to $44.1 million in 2023. That's a significant reduction.
Over 50% drop.
Yeah, more than 50%. And this hit to profits was primarily due to increased spending on R&D and, crucially, the costs tied to ramping up their HALEU facility. So that pushed their net profit margin down quite a bit from around 15% in 2023 to about 7% in 2024.
Okay, that 50% drop is definitely something to notice. Is that purely down to these HALEU investments, or are there other underlying concerns investors should maybe worry about? How does management explain that?
That's a really sharp point. It's not just, a random bad quarter. It tells a story. Centrus is basically sacrificing short-term profit here for that long-term strategic position in HALEU. It's a calculated gamble, really. Management is effectively saying, look, we're investing heavily now to capture this future market that we pretty much have to ourselves domestically.
Yeah.
So while the numbers look stark, the insight is that this is largely by design. They're betting big on HALEU becoming a major revenue stream later. It's crucial to understand that to distinguish it from, say, just falling demand or bad operations.
Right. Makes sense. They're playing the long game here. With that context, what does the company actually say about future earnings? Any guidance for us?
Well, formal guidance is a bit limited right now, which, isn't that unusual for a company in this kind of transformative phase? However, they have noted that these ongoing HALEU contract talks with the DOE could lead to increased revenue, maybe showing up late 2025 or into 2026. For now, their basic EPS for 2024 was $1.54 and diluted was $1.52.
With those development costs and future hopes in mind, my mind immediately goes to the balance sheet. How healthy is Centrus financially right now? What's their debt situation? Cash.
Good question. So as of December 31st, 2024, total liabilities stood at $265.8 million. Of that, $111.7 million was long-term debt. Now, their debt-to-equity ratio, which kind of tells you how much debt versus shareholder equity they're using, it's around 2.0x.
2.0. How does that stack up?
It's moderately high, yeah. Especially when we compare it to typical small-cap industrial peers. They often hover below maybe 1.0x. But, in Centrus's case, with that unique government backing and a clear, although capital-heavy path forward, Maybe that higher ratio is seen as a necessary thing to fund the expansion rather than a huge red flag. On the cap side, they had $57.6 million in cash and equivalents at the end of 2024. Net cash from operating activities was $36.3 million in 2024, which was down from $52.7 million in 2023. And again, that's largely due to those big investments in the HALEU facility.
So they're spending cash.
Yeah, there's no immediate liquidity crisis, let's be clear. But they do expect cash burn spending more than they bring in to stay elevated during this HALEU ramp-up. Management has mentioned contingency plans if those DOE contracts get delayed, which is, an important risk factor to keep in mind.
Okay, given this picture, like significant investment, government backing, how does Centrus stack up against competitors? What's their real competitive edge, their moat?
That's the million-dollar question for any investor, right? Their moat. So you have larger, globally established players like Urenco and Orano. They definitely have scale. But Centrus benefits hugely from U.S. policy that explicitly favors domestic enrichment. That's a big deal. Their specialized technical expertise in HAU, plus those deep federal relationships with the DOE, that's a very clear competitive edge. It's almost like a policy-driven moat.
So it's not just tech, it's policy too.
Exactly. But the insight here is, while they have the tech lead and these political tailwinds, execution is key. Actually delivering, scaling up HLEU efficiently, leveraging those fixed costs. That's crucial for long-term success. The moat exists, but they still need to, build the castle effectively.
Right. So they've carved out this unique niche, but the financials show that big upfront investment. What about recent momentum? What's been happening lately and what's on the horizon that could impact things?
Okay, yeah. This is where we see some really strong tailwinds building. Back in June 2025, Centrus got a contract extension from the DOE. That authorizes HLEU production through June 2026, and it's valued at around $110 million. That's not just cash, it's validation.
A sign of confidence from the DOE.
Precisely. And they also completed phase 2 of that DOE HLEU contract, delivering 900 kilograms of the fuel. So, tangible progress.
That does sound like significant movement on the HLE front.
It really is. Then, fast forward to July 2025, Centrus reported a massive $3.8 billion backlog.
$3.8 billion.
Billion, yeah. Mostly from multi-year utility contracts. Now, this isn't just a big number. It gives them incredible revenue visibility, like a clear line of sight on revenue way out to 2040.
Wow, that's quite a runway.
It is. And the DOE also exercised an option for phase 3 of the HALEU contract, worth another $110 million. So more government commitment right there.
That $3.8 billion backlog is incredibly impressive. But are there potential downsides or maybe restrictive clauses in those long-term contracts? Like, do they cap the upside or have really strict performance metrics?
That's a very sharp question.
Yeah.
Yes, typically these long-term deals, while they provide stability, often come with predetermined pricing structures. And yeah, strict performance milestones. So the upside might be somewhat capped, maybe on a per-unit basis compared to spot market potential. But the trade-off is guaranteed volume and revenue over many years, and that's vital for funding something as capital-intensive as HLEU production. So you're trading maybe some speculative price upside for stability, which for a company in this growth phase can be a massive plus.
Right, stability versus speculation. Makes sense. Any other recent news that stood out?
Yep, just in August 2025, they strengthened their balance sheet by raising $114 million through an equity offering. That cash is crucial, obviously, for supporting the expansion of their enrichment capacity in Ohio. And they also reported pretty strong Q2 2025 results, $154.5 million in revenue and $28.9 million in net income. So demonstrating some continued operational momentum that quarter.
Okay, looking ahead then, with all this activity, what are the key short-term and long-term catalysts that, an investor should really be watching?
Short term, keep a very close eye on potential DOE contract decisions. We expect those late Q3 or Q4 2025. Those could be market movers. Also, their next earnings release, probably November 2025. That'll give us an updated snapshot. Long term, the big one is the transition to full-scale HALEU commercial production. That could really change the revenue and margin picture maybe by mid to late 2026. And of course, any further U.S. nuclear policy support, new laws, more funding for advanced reactors, that would be a huge tailwind.
And what about the whispers, the more speculative side? What's the industry chatter, anything that could really move the needle?
The fun stuff. Well, there's definitely industry talk about the DOE potentially accelerating a full 8-year extension for HALEU. That could unlock over $1 billion in multi-year revenue. That would be massive, obviously.
$1 billion, wow.
Yeah. There are also rumors about Centrus maybe securing international HALEU supply deals, specifically with NATO allies. That would be huge for diversifying beyond just the U.S. government. And then, the usual speculation about sell-side analysts starting to raise price targets as these contracts and policies firm up.
Okay, we've hit the business, the financials, the news. But for many investors, the chart tells a story too. What's the technical picture look like for Centrus lately?
All right, let's glance at the charts. Over the past 60 days, so through about September 5th, 2025, the stock's been trading in a range between roughly $150 and $185 per share. That points to pretty high volatility. Looking at key levels, we see technical support down in the $150 to $158 zone. That's where buyers seem to step in. And resistance, where sellers tend to appear, is up around $185 to $190. It's struggled to break convincingly above that. Indicator-wise, the 50-day moving average, kind of a short-term trend guide, is near $170. The longer-term 200-day is around $162.
And the price is above both.
Currently, yes. Trading above both generally suggests a bullish bias in the short term. Buyers seem to be in control for now. We also look at the RSI, the Relative Strength Index, a momentum indicator. It's been oscillating in the 60 to 70 range. Now, that's approaching overbought territory, but it's not extreme yet. Doesn't scream imminent reversal. And MECD, another trend indicator, is positive. But the gap between the MECD line and its signal line is narrowing a bit, which could suggest some short-term consolidation is possible. Maybe the upward momentum is pausing.
Okay, so bringing this all together, what does this mean for you, the listener? Thinking about all this info, what are the major risks you really need to be aware of with Centrus Energy?
Yeah, this is crucial for any potential investor. How much government dependency is too much? That's a key question here. A huge chunk of Centrus's current and, importantly, future revenue relies heavily on those DOE contracts. That makes their growth, their cash flow, very sensitive to federal budgets, political shifts, you name it.
Policy risk, basically.
Exactly. There's also the very real risk of cost overruns or delays in scaling up HALEU. That could really pressure margins and their cash position. And customer concentration is another one. Heavy exposure to just a few very powerful counterparties, mainly the government right now. Beyond the company itself, you've got broader market and sector risks. Uranium prices, nuclear commodity prices, they can swing wildly based on global geopolitics, supply issues. Shifts in U.S. or global energy policy can create sudden opportunities or sudden risks. And like a lot of small-cap stocks, especially in specialized sectors like nuclear, Centrus can see amplified volatility and liquidity risk, especially if the broader market turns down.
Okay, so pulling it all together then, what's the general feeling, the consensus among analysts and maybe retail investors right now based on what we've reviewed?
Well, as of September 2025, sources like MarketBeat and Fintel show a consensus rating of around hold or maybe speculative buy among the niche analysts covering it. And that really reflects that government dependency we just talked about, right? The reliance on those contracts for near-term growth.
What about insiders? Buying or selling?
Looking at insider activity back in June 2025, it mostly showed routine stuff, option exercises, some planned sales. Nothing huge, no large-scale buys or dumps that would scream strong conviction either way from management. Social sentiment, like on Fintel forums, seems mixed. You see some bullishness definitely focused on those nuclear policy tailwinds, but also, understandable concerns about their capital needs for the big expansion plans. So connecting it to the bigger picture, Centrus definitely offers this unique high-potential exposure to the whole U.S. nuclear fuel cycle comeback story. But you have to say it remains highly speculative because of that government contract reliance, the execution risk in actually scaling HALEU, and those somewhat volatile cash flows. The technicals and policy tailwinds look pretty good right now, yeah. But they're balanced by that margin compression we saw, the leveraged balance sheet, and the constant need to keep winning those contracts.
So what does this boil down to for you as an investor? The analysis we've looked at suggests this stock might be better suited for shorter-term trading right now. Trying to capitalize on momentum from DOE news, relative sector strength, given its volatility. For long-term investors, you're facing higher funding risks, policy risks, execution risks, at least until full-scale HALEU is truly commercialized and they maybe get more diverse revenue streams. The overall rating from the analysis we reviewed, weighing the opportunity against those risks, lands at about a 6 out of 10. So here's a provocative thought for you to chew on as we wrap this up. As the whole global energy landscape keeps shifting, towards decarbonization, towards energy security, will companies like Centrus, with this very unique tech niche and that strong government backing, will they actually become foundational pillars of the future energy grid? Or will their built-in reliance on political will and policy make them sort of perpetually speculative plays, always seeming on the verge of something big, but maybe never quite getting there solidly. Something to think about. Thank you for joining us on Investing Talk podcast.
We hope this look into Centrus Energy has given you some valuable insights. We'll be back soon with more analyses to help you stay well informed.